Imagine a company so powerful that it manages more money than the GDP of most nations. A company whose influence reaches into governments, corporations, and even your retirement account, whether you know it or not. That company is BlackRock. BlackRock began in 1988, founded by Larry Fink and 7 partners in a small office in New York. At the time, it was just a modest risk management and fixed income firm, far from the trillion-dollar empire it would become. Fink had been a rising star at First Boston, one of Wall Street's biggest firms. But a single mistake, losing the company $100 million on a risky trade, almost ended his career. For Fink, the failure became an obsession. He was determined to build a firm that understood risks so deeply that such a loss would never happen again. That obsession gave birth to something revolutionary, a risk management platform called Aladdin. Aladdin wasn't just a computer system, it was a financial brain. It could analyze billions of data points, stress test portfolios, and model risks across global markets. Soon, major banks, pension funds, and even governments were relying on Aladdin to make sense of their portfolios. BlackRock wasn't just managing money. It was managing risk for the most powerful players in finance, and that meant it had a seat at the table everywhere. Through the 1990s and 2000s, BlackRock grew rapidly, fueled by acquisitions and by its reputation as the firm that understood risk better than anyone. By the time of the 2008 financial crisis, BlackRock was already enormous. But that crisis would catapult it to a level of influence no private company had ever achieved. When Wall Street collapsed in 2008, governments needed help. The US Treasury and the Federal Reserve turned to BlackRock to manage the toxic assets of Bear Stearns, AIG, and others. In effect, the US government handed the keys of its financial rescue to a private company. That moment changed everything. BlackRock wasn't just an asset manager anymore. It was a rescuer of last resort, with intimate knowledge of the financial system's inner workings. And its reputation as the firm that could be trusted in a crisis made it indispensable. By the 2010s, BlackRock had become the largest asset manager in the world. Today it controls more than $10 trillion in assets. To put that in perspective, that's more than the GDP of Japan and Germany combined. If you've got a retirement account, a pension, or an investment portfolio, odds are BlackRock has a piece of it. Their holdings stretch across nearly every major company in the world: Apple, Microsoft, Amazon, ExxonMobil, Coca-Cola, and thousands more. When you look at the world's largest corporations, chances are BlackRock is one of their biggest shareholders. One of the keys to this dominance was the rise of ETFs, exchange-traded funds. BlackRock's iShares ETFs exploded in popularity, becoming the default way millions of ordinary people invested. This wasn't just about fees or convenience, it was about scale. Trillions of dollars poured into BlackRock's funds, giving the company extraordinary control over global markets. But BlackRock's influence goes even deeper. Every year, Larry Fink writes a letter to CEOs outlining what he believes companies should prioritize. These letters are not mere suggestions, they're seen as directives. When Fink calls for action on climate risk, sustainability, or corporate governance, boards of directors across the world take notice. This power has led some to call BlackRock a shadow government of finance, a private company with influence that rivals central banks, regulators, and even elected officials. Of course, such enormous power has made BlackRock a target of criticism. Some argue that its close ties with governments represent a dangerous conflict of interest, especially when it is both advising regulators and managing assets for private clients at the same time. Others claim that its push for ESG, or environmental, social and governance policies, amounts to a form of corporate overreach, shaping global priorities without democratic accountability. Still others worry about the sheer concentration of financial power. When a single firm holds stakes in nearly every major company, competition itself can be blurred. BlackRock says it is simply serving clients, but critics argue no single company should ever wield so much influence over the global economy. Yet despite the controversy, one thing is undeniable. BlackRock is now woven into the very fabric of modern finance. From Wall Street to Main Street, from pensions to governments, its reach is almost impossible to escape. Whether you see it as a stabilizer or a threat, BlackRock's rise tells a larger story about how money, technology and power have concentrated in the hands of just a few players. And the truth is, BlackRock's influence is likely to keep growing, quietly shaping markets, governments, and maybe even your future, without most people ever realizing it. This is the story of BlackRock, the trillion-dollar titan, the quiet power behind the global economy, and perhaps the most influential company you've never truly seen.